Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Joe H., Tom B., at 7DJ7, and Todd A. On the program today, we've got a new guest with us for the first time. Mr. Lon Shaver is on the podcast with us. Lon is president of Silvercorp Metals, a silver, gold, and base metal focused producer and project developer with operating mines in China and development projects in Ecuador. Silvercorp is currently developing the El Domo copper gold project in Ecuador, with expected first production in late 2026 and ramp up in 2027. Silvercorp Metals is listed on the New York Stock Exchange under the symbol SVM and also on the Toronto Stock Exchange under the same symbol SVM. Mr. Shaver, welcome to SmithWeekly Discussions.
Thanks, Andrew. It's great to be here.
Yeah, Lon, great to have you on the program for the first time. And with that, as you are a new guest, why don't we kick it off here by you giving us your background and experience in the junior natural resource sector?
Well, my background's more finance than anything. Did a business degree, started my career in Toronto on Bay Street with an institutional equities boutique in the research department as a research associate. And then somehow the mining sector got its hold of me, and I got dragged into mining and resources, and really largely been there ever since. Mining research turned into mining investment banking, also in Toronto. And then I took a bit of a detour, ended up in Vancouver, working, and this was the one area outside of resources, but it was corporate, working for a technology company. But then I ended up back in a very familiar territory, which was mining investment banking here in Vancouver, which I did for 10 years. After I left that, looking for other things to do, and reached out and contacted an old client of mine, which was Silvercorp, really on another idea that I had to work on a bit of a side project. But then they offered me the opportunity to come on board.
Well, I appreciate you going through that. Obviously, in this sector, finance is a very important thing. Capital markets, definitely, you get a few different facets of experience, and that is very useful as you come into some of these roles. So, very good information on that, Lon. How do you look at the gold and silver market today? Current prices, and if you want, your take on copper as well, given the development exposure to El Domo. But how are you looking at the market there?
Well, obviously we're seeing great times. We have to be under a rock to not sort of see what's been going on in terms of the gold and silver market recently. It's very interesting. You look at the market practitioners who've been talking about sort of more positive markets for gold and silver for a long time, and there's been pundits out there calling for $5,000 gold, and a lot of people sort of shook their heads and thought, well, that's crazy. Why? And now I think we're at a place though where when you look at the dynamics in the market, you can sort of say not why, but why not? It's certainly possible, and I think you just have to be a believer in what gold, silver, and to some extent what copper represents in terms of indicators for the economy, or for the over geopolitical situation in the world.
Absolutely agreed with that. And definitely 5,000 is very much within the bounds now, given where we are at around 3,800 an ounce as we talk here today. And silver looking quite good. Obviously, you guys are well exposed to silver and also copper on the energy side, base metal side, very much important here as well. Interesting times, knock on wood, good times here. We would expect that that's going to continue given the backdrop here. Well, with that, Lon, an audience question for you, and this is in relation to our favorite beverage piece in our standard introduction. But what is your favorite beverage?
Yeah, life's gotten a little bit more serious lately. So I have to say, while I can be a fan of a good glass of wine or a Scotch. Probably my top choice, if anyone who's been out at a meal with me lately, it is sparkling water. Just That's kind of the go-to these days. So it's the way to stay healthy. I'm not the best at staying hydrated, so if I'm at a meal and I can order a sparkling water, that's probably the way to go. Top choice would be San Pellegrino, and I could put a couple of bottles, big bottles, away at a meal if I get the chance. So not the most exciting choice, I recognize, but maybe that's the message. It's important to look after yourself, be healthy.
Appreciate that. And with the sparkling water, of course, a good little bit of CO2 coming out of that with the carbonation. So fantastic. I like that. Good stuff. Thank you for sharing that. Why don't we jump into Silvercorp? You already told us about how you came into the role, so we'll bypass that for a moment unless you want to add to that. But just give us a brief overview and background of Silvercorp.
Well, I think it's important to recognize that Silvercorp has been really the brainchild and the objective of our chairman and CEO, a very skilled, proficient geologist, very smart guy who's obviously done incredibly well in geology and being able to assess ore bodies and the potential for discoveries, but has also then really mastered all the other discipline domains that would be important for a mining executive. Thinking about what are the engineering aspects of building a mine? What are the permitting and government aspects, financial aspects, legal aspects? So really, Silvercorp is the result of a vision that he had to build a growing, profitable Canadian mining company, which is what he set out to do after he finished his PhD in geology here in Canada, established himself in Vancouver, and then went out looking for, what's a real viable business that one can build, not just sort of what's a hot geology story, but really what has the potential to translate and make that transition from an interesting idea to a business. And so I think that really is, in a nutshell, the story behind Silvercorp is finding those deposits that can become mines that will be profitable, sustainable, generate cash flow for shareholders for a long time. While Silvercorp started through introductions to with the assets in China, we're now clearly demonstrating willingness to translate that model elsewhere and grow by buying other good projects that we can build, bring into production. Not just grow for the sake of growth, but grow and diversify the company. Because our view is that multi-asset, multi-jurisdiction mining companies will trade at higher multiples than single asset, single jurisdiction.
Very good information there. Appreciate you walking through the overview there. And of course, you guys have been active on that front with expansion into Ecuador and mergers and acquisitions as well there. Very good information there. A lot appreciate that. Well, we're going to get into some of this stuff that you mentioned here in a moment. I want to talk about second quarter results, which I believe, if I have my stuff right here, that would be Q1 fiscal year 2026, given the company has a different year end than a calendar year end. Let's have you cover off the China operations at Ying Mines Complex, GC Mine operations, as well as just key results so far and any guidance that you can give.
Yeah, well, I would say our Q2 numbers were excellent in terms of results. And you're calling it Q2. Yes, it's our for the 3 months ended June, which is our Q1 2026. 81 million in revenue, operating mining earnings $35 million, free cash flow $23 million for the quarter. So just, yeah, very very solid numbers, and it really is demonstrating that what we have in terms of that profitable business that I mentioned earlier, we're seeing growth in the output, so that's great, and we expect that to continue going forward. But then also in these current price in this current price environment, to see that you can benefit from those higher prices and deliver not just top line revenue growth, but also have it translate down to earnings and cash flow, means that that you're running a margin business that can deliver bottom line performance, not lose all that top line growth due to higher costs. So we've been doing a good job at keeping our costs pretty consistent. Last year our all-in sustaining cost net of byproduct credits for the year was just over $12 US an ounce. In that first quarter, it was a little higher, and again, this will be a bit bumpy from quarter to quarter, but still at 13.50 corporate wide. That's a pretty good number when you're looking at plus $40 silver here.
Appreciate you going through some of those initial results here, and we'll talk capital structure a little bit later and a few more things on that front. Just on operations, Lon, any comments on expansion work at Ying Complex? And also, the company started construction at Quanping. Talk about that project as well.
So I'll talk about Quanping first. Quanping is a satellite project that we acquired through an auction process in late 2021. And since we've acquired it, we've gone through the process of getting permits together, and there's a series of different permits. There's the overall mining permit, which allows us to mine, up to 200,000 tons of ore per year from that operation. But then to actually break ground, you've got to prove and file that you've got reports to handle that you can do it safely, you cannot harm the environment. We've gone through that whole process, so now we're in the position of basically starting to drive the ramp, the decline down to the ore body. And so as we progress here through the year, and it's not huge capital, this is very, again, similar, going back to the roots of Ying, which was bootstrapped out of some early high grade production and then use cash flow to grow and build the business. That's kind of the model we're going to employ here. Drive down to those areas, get a better grip on what we're dealing with. There is a Chinese calculated resource at Quanping. We've not published a 43-101 resource or reserve. We've not put any production guidance out for that, but I strongly expect that through the course of this year, as we drive that decline down, we'll end up with, call it development ores or bulk sample type ores that will get trucked and processed at the Ying milling facility. And, that will be sort of how we will grow Quanping to become kind of like the 8th mine at the Ying mining district. It just happens to be a bit further than the other ones. Over the course of this year and leading into next year too, we're going to put together a standalone technical report that will report for the first time 43-101 resources and reserves, as well as a mine plan for Quanping. And what we see Quanping as being one of those incremental sources of production growth for the Ying district. When we look ahead to growth at Ying, call it 8 million ounces, growing to say 10 million ounces of silver equivalent, in the next couple of years. And importantly, when I say silver equivalent, it's just silver and the gold converted to equivalent. We don't convert our base metals to silver equivalent when we quote our numbers. The base metals are viewed as a credit to production costs. But as we look at growing those production figures, it's not going to be from just one place or one spot or one growth project. It's going to be a series of these incremental growth projects, Quanping being one of them. But then, debottlenecking and shifting the mining method at Ying to more mechanized mining be a way that we'll see this growth. And we've prepared for it because in 2024, we invested to expand the milling capacity at Ying from 2,500 tons per day to 4,000 tons per day. And so we have some excess capacity in the mill now that we can accommodate this incremental mine production.
Good progress on construction there, and wishing you guys good operations and ramp up on that satellite. It's a great expansion project here for you guys, so thank you for the information on that one. Any updates on expected full resumption at HZG mine?
After that unfortunate incident last quarter, in terms of that fatality, we had what was an immediate shutdown to allow the regulators to come in and review our practices, review our policies, make some recommendations. Those were implemented, and we basically ramped everything back up to plus 90% of what had been targeted for the quarter. So I would say that incident is effectively behind us.
Well, looking forward to seeing start back up and get back to full resumption. And hopefully everything goes well on that front, Lon. It's always these unfortunate events, and hopefully things can get back on track there. And I want to have you just talk a little bit about China. This is a mining jurisdiction that probably isn't well known for some of our audience. What are your thoughts on working in China and its friendliness towards foreign investment into natural resource development?
Well, I think the second question first. China has obviously been a destination that's very welcoming of foreign investment of all types, and in all natures to build businesses in China. And I think that's maybe a bit of a fundamental difference between China and the West is there's really a recognition that to grow an economy, support improve standard of living, you've got to do something as a country and as a society. So there's a recognition and a support for entrepreneurship and building a business. At the same time, certainly like any other jurisdiction, it's complicated and there's lots of different aspects, regulations, policies, procedures that one has to navigate. And fortunately, we've been there a long time. We've built up a team and an organization and an infrastructure with people who know how to do that. And so I think we've got what is good integration, with the different government agencies to understand what it is they're looking for, have those open channels of communication. So when something happens, and for example, like in this case, it was this unfortunate fatality, we're able to have an open and honest dialogue, understand what needs to get done, implement those things quickly, and then there's a recognition that okay, yes, you've done what you need to do. You're back up and running. And I would say that applies also as it relates to growth opportunities. And so I mentioned Quanping. That was a project that was put up for auction, and we were certainly welcomed as being not the shoe-in and the incumbent, but certainly a preferred and a welcomed bidder, just because of our track record of operating our mines in the Ying mining district to such a high standard. So there's definitely a lot to do and a lot to think about. But if you follow the process and you stay in communication and be open to what's being suggested, then you do get that very important license to operate, license to grow, license to expand, and that's what we've been successful doing. Approximately 20 years now at the Ying mining district. So, Andrew, another thing that's really important to understand about us operating in China is some of the advantages that we have. So, we're mining and producing silver, lead, and zinc in concentrates, and we are selling those concentrates to the smelters domestically in China. So many of these smelters are the same ones that other mining companies, with mines in Mexico, Peru, etc., might be dealing with ultimately. But we're dealing with them on a domestic basis. We get more favorable payment terms. So there's great transparency in terms of what we sell our metals for. And mechanically, we don't have this disadvantage of having to get our concentrates to a port on a boat across the ocean, land them, and then get them up to the smelters. The way it works for us is we put up a batch of concentrates to tender effectively to the smelters that we deal with, where we have these master agreements. Based on their particular needs at the time, they will bid based on the pricing and the treatment type refining charges that make sense to them. The winning bidder that we pick, we tell them the quantity that they've just bought. They actually wire us the funds in advance, and then their trucks come to our mine and pick up the concentrates. So, we don't have any of the headaches of dealing with that once the concentrates have left our mine. We get paid for the contained metal value on a very transparent, competitive basis. And in this current world, with all the questions about international trade and tariffs, we don't export anything out of China. I just jokingly like to say we export dividends. Now, on the other side of things, from a cost and a consumption and inputs and materials, being in China means we're close to all the manufacturers of reagents and the inputs and the equipment needed for mining. And so we don't have to carry the same kind of inventory and working capital. When we want these supplies, there's a number of suppliers. It's very competitive, pricing, and we get it delivered when we need it. And a very recent example of sort of how cost competitive things are in China. I mentioned, we've expanded our mill at the Ying mining district, and we were able to bump it from 2,500 tons per day to 4,000. That was at a cost of 7 million US, just because we were dealing domestically with the equipment suppliers. So, great advantage for China and how easy it is to get, business done in that country.
Yeah, that's great to add, Lon. And I think, you guys having that domestic advantage and then also just the smelting capacity that China has there, you cut out a lot of logistics and you get really good pricing. And then when you can have them come to your door and pick up, that's even better. So appreciate you covering that. And then I'm sure there's going to be some logistical ties to the Ecuador work as well. And so it's good to have those relationships set up.
Absolutely.
Appreciate you going through that. And definitely China is one that, you don't see a lot of, Canadian based companies going into and doing mining. And you guys certainly have a long track record there.
I think it's important to note, the way in which we operate in China is that the mines are the permits are held, the mines are run, the employees are paid, and the taxes are paid by Chinese corporations. So they are Chinese entities. But just like again, any other Western business with investments in China, like that's perfectly normal to have, and there's a well established way that we can flow dividends out from the operations back to head office.
Well, with that, why don't we, short of anything else you want to add on China operations, I think we have a good idea of existing production expansion that's going on. Why don't we shift into Ecuador? Talk about Ecuador as a mining destination as well, given now that the company has dealt with development processes, permitting matters, and with El Domo. Just talk about your experience and your thoughts on Ecuador.
It's been interesting experience. And I said China, was certainly can be complicated. Ecuador is complicated. Every jurisdiction really is going to have its complications. Ecuador is clearly, endowed with some great mineral deposits. What they have been lacking is called them commercial scale operations, and really there's only two in the country right now of any note. That would be the Mirador copper gold mine and Lundin Gold's Fruta del Norte. So when we bought Adventus, we benefited from the fact that they had received the permit to build the mine, and as a side note, that's a key consideration for us when we look at M&A, is looking at projects that have a permit and effectively a license to operate, so we can move ahead with building a mine. So we've come into Ecuador focused on picking up and advancing El Domo on the back of that permit. We've been seeing good support from the government. I would say the government is recognizing that the traditional sources of foreign exchange, foreign exports, being oil and gas, fisheries, and bananas, are great, but it would be good to have mining be another sort of strong contributor to the portfolio, like its neighbors. And so I think overriding the government is viewing mining as an industry that can and should be bigger in Ecuador, and we certainly have been benefiting from that. And again, that doesn't mean that everything is always easy, but you have, I'd say, overall from the top down, a recognition that as long as things are being done properly, you can and should be allowed to move ahead. That's been our experience so far. And our second project in Ecuador, the Condor Gold Project, not as advanced as El Domo, but from our teams working there and what we're looking to do, we're finding a lot of cooperation from different levels of government to deal with the paperwork, to deal with the permitting applications that we're working on. We've been able to mount a drill campaign this year to go and test some other areas. So I'd say the country has been receptive from our standpoint for advancing those two projects.
It's always good to get your opinion on the jurisdiction and how things are going on that front. It's always good to collect that as we talk to various guests on this program. Good information on that front. With that, as you guys continue to build out operations in multiple jurisdictions. Ecuador, of course, as the newest. Are there any other jurisdictions the company would have interest in that it might want to expand into in the future?
Yeah, I mean, there's lots. We've shown through attempted M&A a willingness to go to Guyana. We were in the running and in a bit of a battle for a big gold asset in Tanzania. And with our investment in New Pacific, we've shown a willingness to look at the Americas from, say, Mexico south. We've been interested in and would look at projects in Africa. And then, more generally, sort of broader Australasia would be another area of focus. So that sort of is kind of the overall areas that we look at. But then, within those, clearly there's countries in Africa that we're not that interested in. Similarly, less interest in some places in South America or the Americas. So it really comes down to what is the central government's, view of mining. Can you get a framework that makes sense from a fiscal and economic standpoint to build a mine? And then does that openness and support for a mine, translate down the levels to get to the ground level where you really have to have a community and a region receptive to what you're going to build. Some of the compromises that need to be made, but also some of the economic development that can be brought to the region as a result of building a mine like these. And it's not easy for sure. Your opening question about the commodities. How would one feel about gold, silver, and copper? Well, clearly, from a supply standpoint, it's not getting easier to build mines anywhere in the world. So if you're looking at mine supply, from a growth standpoint, it's highly unlikely that mine supply is going to ramp up in any of those key commodities to meet what we see as strong demand.
And you have so many parts that need to fit to be able to pull the trigger on some of these opportunities, some of these assets, and the evaluation that goes into them. So
Yeah.
good information on the jurisdictions. It's always interesting to get thoughts on different jurisdictions and that appetite level for the jurisdiction based on different aspects. And of course, some of these jurisdictions, I wouldn't call them sophisticated, Lon, but some of these jurisdictions, could take upwards of 10 years, 15 years, maybe even more to get something finally going. And so you have those jurisdictions as well. Lots of pluses and minuses out there. Well, I want to come back to El Domo. Give us an update on construction progress there, the next milestones you're seeing on the schedule, and any updates as to when you would see first copper and gold production on commissioning and ramp up.
Well, last things first, our target is to be commissioning and ramping up in early 2027. So the schedule has us completing construction late 2026. And so then you'd be in a position to turn the switch on and start in early 2027. This year, we began at the beginning of the year with the signing of the first of 5 bid contracts that we've taken the construction of the mine and broken it into 5 different components. The first one, we signed and got going with in January was basically site prep and some early earth moving, putting in some roads, widening, expanding some roads, also water diversion channels, preparing like the terraces and the flat areas you need for the fuel storage area and for the plant site. Those have all made good progress. And we've been working on installing what would be the temporary camp that will be needed to really step into the next stage, which will be a much more dramatic ramp up in people, equipment, and earth moving. And so for that, we need that camp, which we're expecting to have done here in the next month or so. We're looking to sign, and then we'd have some news out on the execution of that bid contract number 2, which really gets us into, as I said, some of that early stripping of the open pit, as well as other earth moving to allow us to advance the construction of some of the site infrastructure like the tailings dam and water storage ponds, etc. So we've been working through it this year, but here in this last quarter, we're expecting a dramatic ramp up in activity on the site.
That's great. Thank you for that update, Lon. Good information, and looks like late 2026 is kind of where we're seeing that maybe first production coming out there and really getting in gear in 2027. So hopefully you guys will stick on schedule and maybe even beat potentially there. So good luck on that. As you guys get into full production ramp up at El Domo, all the kinks get worked out, things are going well, smooth, steady state. Two things here essentially. How would you guys look at the expansion potential there, the exploration upside at El Domo as well? How would you also manage that approach to development decisions at Condor?
Definitely, those two questions are unrelated. So they're not tied to each other in any way. Condor game plan is underway and it's going to follow its course completely independently of El Domo. Conveniently, we're not looking at being in big construction decisions or anything for Condor at the same time as El Domo is moving ahead. But I mean, just quickly on Condor, what we're working on right now, after completing the updated resource that we published, where we took the old data that had been drilled at Condor and in particular two deposits, and relooked at that from an underground perspective and got some good numbers, justification for driving ahead with the plan. So that plan involves working on a PEA, which we're hoping to have done by the end of the year, early next year. At the same time, advancing permitting to be able to drive twin declines down to those deposits so that we can really get down there and drill off from a spacing and a confidence standpoint, those high grade underground zones so that you could be in a position to transition to mining. And so then if all of those things, work out with a positive PEA, the drilling work taking place, we would find ourselves at some point here with a construction decision where to actually move into, commercial production, you'd need surface infrastructure. You'd already have access to the ore body from those declines, but you need a mill and a tailings facility. And that's obviously something that would have to go through a permitting process at that time. So that's kind of underway. We're happy with the progress that's been made so far. We kind of feel that Condor we got for free as a result of the acquisition. It's progressing on its own schedule. Flipping back to El Domo, yes, it's on a much bigger property package. It's one project, within a larger exploration concession. There's some indications of potential, but right now our key focus here is on building a mine that works, technically works financially. That's the key priority. And for us to get ahead of ourselves and thinking about expansion or exploration, it would be defocusing from the task at hand, which is, to build the mine as laid out in the feasibility study, which is what we've committed to doing. I think what will happen is we'll get El Domo up and running a couple of years in, and with the benefit of positive operations and some positive cash flow, we can then look at reinvesting some of those funds regionally and looking to see if El Domo has satellites or expansion potential at that time. But
Excellent.
we're not thinking about that right now.
And certainly you guys shouldn't be. That's good. And I think this is more geared towards the investment side of how folks are looking at continuance expansion and those types of things with this pipeline in Ecuador that you guys have now. So obviously it makes sense to make sure you guys are focused on getting this up and rolling smoothly. And then definitely Condor falls in later down the road as a pipeline project. So you guys have quite a hold already in Ecuador there with what you guys are working on. So appreciate the comments on that, Lon. Well, I'd like to move on to some administrative items for the company. First, capital structure. Cover off the shares outstanding for us. We talked a little bit about balance sheet and cash and debt, but just highlight that again for the audience. And then as well as the major shareholders on the roster, including management and the board.
Pretty simple capital structure in the sense that we've got 218.5 million shares outstanding. We've had a great track record. Last time that we had done an equity financing as a company was 2010, and so the only issuances really over that period up until the acquisition of Adventus were from RSUs and stock options that got exercised. So very prudent management of the capital structure. In November of 2024, we did a convertible debenture to add to our war chest. We raised 150 million US in that 5-year convertible. It has a conversion price at 463 US, so we're in the money now. But obviously, given the way these things trade, certainly not expecting anyone to convert early. And what that's left us with is at the last quarter, we had cash on hand of 377 million US. So 377 million US in cash, offset by 150 million in a very manageable convertible debenture. And on top of that, we have an investment portfolio in other mining stocks. The biggest one of those, of course, is our 28% stake in New Pacific, which is advancing, 2 very exciting silver projects in Bolivia. So not a lot to think about or to understand from a capital structure standpoint. In terms of shareholders, top 10 investors, it includes names like VanEck, Tidal. So we've got a couple groups that are the ETF funds. Refeng, our chairman and CEO, is 3%. I'd say insiders in total have about 4%. And then it's really spread through some ETFs, some very notable quant type funds, Renaissance Technologies, and then some more traditional long only type equity funds. Between institutions, probably total around 45% holdings of the company, and then retail and high net worth investors is about 51%. So still a very high retail component in our stock.
Excellent. Thank you for going through that, Lon. With that, also related here, semi-annual base dividend that you guys have in place, and also recently you guys are buying back shares under a normal course issuer bid. Talk a little bit about both the dividend there, the buyback, and really how you guys are balancing that dividend policy against valuation for buyback.
If you look, the dividend's been pretty stable, pretty flat. Some people have questioned, well, why not raise the dividend? But as we look from our game plan and what our strategy is to grow the company, we've been looking to build that cash balance to either be used in terms of acquisition consideration or cash to build our next project. So if we, bump the dividend up dramatically, that wouldn't allow us to build as much cash to enable that strategy. So I would say the dividend is more of a legacy and it's more symbolic. In the past, in some of the heady years in the early days, when there wasn't the thinking of growing the company and diversifying, there were some bigger dividends and even some special dividends. But the dividend we're paying right now at 2.5 cents US a share paid semi-annually is more symbolic to show that there's a recognition that investors should get a return, and if that return isn't from capital gains in years when the markets aren't doing great, there will be dividends paid. And so that's really how that decision has been made. With respect to the buyback, I think it's important to note that we've had the normal course issuer bid program in place pretty much every year. And that has really been more of an opportunistic thing rather than a committed plan or a program to buy back. It's more when we see things just get really crazy out there in the market, and the stocks, our stock, other stocks are just getting punished. It's an ability to go deploy, I'll call it a measured amount of capital to buy back stock at those times. And I think we've done a good job where we have bought it, picking it off at some of the lows during those time periods. But we don't have a committed program in place to spend X dollars or make large commitments on that. Similarly, within the same month that we renewed the normal course issuer bid, we also filed a shelf prospectus. And this just comes back to management flexibility and having all the tools available to you, that when opportunities arise, you can move ahead quickly and do what you need to get done to further the company's business plan. So I think so some people out there have commented, interesting to have the shelf and the buyback, but I mean these are just really normal things that every management should have in place just to be able to respond to market circumstances, which can change.
Absolutely. I think these are good tools to have in place. And you guys being opportunistic on the buyback makes sense. Good information on how you guys are approaching this and some of that strategy behind it. Dividend investors are, I think you have a demographic lot of where you have folks that are seeking a bit of income here, but also really in this market seeking that growth as well. And you guys are working on that growth. And then, of course, the tailwinds of the markets also adding to that as far as the share price appreciation. So I think that's a good setup here, and it does capture an extra demographic, and I think it makes sense to have dividend policy in place, plus the opportunistic opportunities for a buyback, which you guys see the potential in that as well. So good stuff there. Talk a little bit about some of the people who are supporting the company on the ground, as well as what they bring to the table. Just some key folks there. We'd like to ask that as part of the management team and board. Anything you want to add on that front?
I think it's important to recognize that we do have quite a deep team operationally, and as it relates to all the administrative matters that need to be covered off from being a public company. We have a interesting aspect to the company, which unlike many others, we do have people who've been involved in building 7 mines in the Ying mining district, 2 milling facilities, 3 tailings dams, all at Ying. Built a mine and a mill and a dry stack tailings facility and a paste backfill plant at GC. We have another mine that's in China on care and maintenance. So, we do have people who've built and run mines, and it's interesting to see that, when we look at planning and executing on El Domo in Ecuador, we've been able to bring operational people from China over to contribute. This isn't necessarily like a long-term, posting, but we've been able to call upon those people to help out. From a management standpoint, obviously, Rifeng is a key individual with a wealth of experience in many aspects of mining, and obviously has a great grasp of the Chinese landscape and how to do business there, but is also an open-minded person to understand where things are similar and where things may be different in other jurisdictions. So he's truly a student of technical things, politics, human nature, and that's what's allowed us, I think, to go in and look at some of these other jurisdictions. On the board, mix of board members, financial background, capital markets background. One of our lead directors is a corporate and securities lawyer who's been with the company a long time and really understands kind of the culture, the background, and the objectives. So I think we've got a good. It's not a large team, but I think we've got a good team. Really, when one of these projects hits, it's kind of all hands on deck.
Appreciate you talking about that and going through some of the folks there and some of the expertise. Juan, that's good to have it. And it's important for an operating company such as yourselves to have that ability to go from exploration work all the way through to follow through on production and operatorship. I think that's important. Well, with community work, I want to talk just briefly about this, Lon. I think this is an important area and aspect of any company that's got operations. Just some of the community work across your operations in Ecuador and China. Talk a little bit about how the company is gaining that community support and partnership for the operations. Anything you want to mention on that front?
In Ecuador, we've inherited a community program that was in place. It was focused on, ignoring Condor, but focused on at El Domo on really a different objective, which was exploration, feasibility, and permitting. And now that we've taken the reins and are looking at building a mine, the needs for that community program are different. So we have been working with groups in and around the El Domo, so it's a Las Navas region, this is what it's called, looking at helping to foster and build relationships with businesses or people who can build businesses to provide services. And so right now, those services have been truck drivers, for people to help move the material. So we've got those kinds of businesses being supported. Cleaning, catering, those are things that can clearly be done. And obviously, as we move ahead and we're doing more with respect to fuel supply, those are all businesses that we can help foster, because we don't want to be in those businesses. And to help have a sustainable operation, you need those support industries there, built by others, run by others, and where the others are getting the benefit from that in the community. With respect to kind of community budget, we've identified a fairly meaningful budget. Hasn't fully been deployed yet. We're in discussions, with the groups to figure out, what are the actual areas that need to be targeted. Is it healthcare? Is it education? Is it recreation? Up to now, we've been sponsoring a soccer team and a soccer school, and looking at ways to help support access to water, so that communities can have water draw points and things. Those have been some of the smaller projects. Going forward with construction, though, of the mine, we will have a bigger budget, and it'll be spread across these different areas. This is really kind of a continuation of what we've been doing in China really throughout the years. Our programs there have been focused on the communities, improving infrastructure, bridges and roads, well, for us, but also for the community to be able to get in and out, and improve transportation. We've had funding in place for scholarships in terms of students, in the communities, buying equipment for schools and things. So we've been doing that. We just published our sustainability report for our fiscal year that ended this past March. We've invested over 1.3 million in community initiatives. Up to now, I've been more focused on the mines operating in China, but as we move forward in Ecuador, as I mentioned, we'll be spending money there as well.
I think one of the key items here is always to listen into the community as to what they need and what they want. And then also, too, I think as we go through the years here and we talk to operating companies and we see some of the issues in the industry, we often find, too, that in some of these jurisdictions, education is really important, specific to natural resource development, mining, and the technical skills and the technical careers that are needed for that, as well as just the importance of having natural resource development across the board and how important that is to our everyday lives. I think that is a key area where some institutions and education programs tend to miss that, all the way down to me, elementary and high school level. So good information there on that. I appreciate you sharing that and some of the work you guys are doing. And then obviously the wrapping up of this work in Ecuador as well, as you guys come into production there in Ecuador. So looking forward here in bigger picture, Lon, talk about the overall strategy for Silvercorp going forward and its desire to be a mid-tier silver, gold, and copper producer over the long term. And with that, if the right bid comes along, is M&A to sell the company part of that bigger overall strategy?
Like, last question first, certainly that's a possibility, and I think with some of the assets that we have and some of the things that we're looking at and could transpire, we could be a very different company here within a few years that would be an attraction. Obviously, we've been running a very profitable and sustainable mine with like a long future in Ying. So certainly, that could be of interest. Probably a narrower audience for people who are prepared to kind of navigate the China complication. But yeah, as we go forward, being a target of someone else is certainly a possibility. And I think as we look at these assets where we're trying to uncover value, surface value, and then demonstrate that value can be long term and sustainable, these assets could put us on the radar screen. On the flip side, going forward, we're looking to build out the company. We're certainly benefiting. You've got 67% of your revenues coming from silver, and the silver price is bumping up, and you've got a great low cost producer. Those are sort of make hay while the sun shines kind of moments, and so we're certainly looking to capitalize on that. But we recognize that going forward, building out a broader platform and a broader base should get us a re-rate in the marketplace. And if we re-rate closer to what our peers are in terms of median valuation multiples, that's a tremendous upside for investors, as we move forward and execute on this business plan. So that's really what we're looking to do. There's a lot of things that we cannot control in the world, commodity prices being one of them. But run good, sustainable businesses, grow the business by adding more good businesses. Those are things that we can do.
Lon, thank you for how you guys see this strategy, and I can certainly agree with you. Make hay while the sun is shining. That's always a good one here. Well, Lon, short of any other comments you'd like to add, we'll wrap it up here. For potential investors who are listening in, Silvercorp Metals has a market capitalization of about 1.3 billion US dollars. Why should the company be considered within the institutional, family office, and retail investors portfolio at this stage?
Well, I've touched on it a little bit. It's just the fact that we're profitable. We've got a number of growth initiatives on the way, and as we execute on those, we would expect to achieve higher multiples. And when you're trading at a discounted valuation relative to your peer group, and things are going well for you, I think that's an opportunity for investors, to get exposure here in the commodity market and benefit from that upside. So that's really the key argument. You're dealing with a company with track record and solid performance, but looking to grow. And I think we've done a good job of putting our money into assets that have that potential to build shareholder value.
And for investors seeking further information, how can they reach the company?
Probably the best way would be to send an email to the investor relations team, and that would be investor@silvercorp.ca.
Well, Lon, thank you for the introduction to Silvercorp Metals. Good luck with operations to finish out the year, as well as construction progress at El Domo. We look forward to having you back to update in 2026.
That's great. I look forward, and it's been a pleasure chatting with you today, Andrew, and I look forward to doing it again.